Hi, this is Zach here with the weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe for Sunday, the 10th of August. Starting off with the FTSE 100, which is right on the line in terms of that uptrend line there from June, and also perched at the top of the old 2024 rising trend channel from the spring of last year. Magic number there around the 9060 level, and so we bounced off that on Friday. In fact, 9080, basically the low on Friday. So a slight amount of wiggle room there. RSI at 58, so still looking for this market to head higher. Ideally, it heads up to 9240, that May resistance line projection by the end of this month, and then maybe as a best case scenario target up to 9400, which is basically the upper parallel of that June uptrend line. On the downside, the worst case would be obviously the 9027 August low, and maybe if things get really rough, the 50-day line 8920, well 8918, 19 in fact, on that particular feature. But at the moment, still holding above 9060. And while that's the case, then assuming that we are still on the upside rather than the downside. Moving along, and it is the DAX, and here this resistance line there from July, which was actually drawn as a bit of an afterthought, actually being a bit of a pain at the moment, 24,400. Need an end of day close back above that to give us a move up to the top of the rising trend channel from the spring of last year as high as 25,400. Not well, probably not now by the end of this month, maybe by the end of next month. On the downside, we've got that the lower parallel of that July resistance line around 23,400. Worst case is we've got to test the 24 or 23,000 area again one more time. But the saving grace at the moment is we're above the 50-day line at 23,900, and also the RSI still above neutral 50 at 53 after other perilous looking push down towards the 40s that we had at the turn of the month. So I suppose at the moment still half full rather than half empty, but 24,600 a bit of a concern. The Dow is next, and here it's been quite messy as well, but at least we've had the two bounces for the market, one just below the rising 50-day line and one above it. The one above it is positive, as is the way that the RSI closed the week just above neutral 50. So assuming that we're still basically in the 44,000 to 45,000 zone, and we still have the chance of breaking through 45 and heading up to 47,400 at the top of that May 2024 channel, and hoping for that by the end of next month, given the slight rug pull that we've had for the start of August. Worst case at the moment is we've got to test the 200-day line at 42,900, or even the floor of the channel, 42,400. But at the moment, assuming that the 50-day line, 43,600, will prevail, and we are still having another go, or will have another go at breaking 45,000. Onto the cryptos, and the situation of Bitcoin looking a little bit better by the day. Obviously, I wrote my magnum opus about how Bitcoin treasury strategy companies could actually fuel the next move higher for Bitcoin. So maybe Bitcoin itself will do rather better than them, but obviously that's a matter of conjecture. Here we're back above the July support there, 115,000, which was our sort of minimum requirement for being bullish. And an end of day close through 121 is probably all we need now to get up to the top of that channel, 131, by the end of this month as a best case scenario target, and best case time frame as well. Downside, hopefully no lower than 112,000, the old May peak, and basically the market bounced at old resistance and made it new support, and also bounced at the 50-day line as well, currently around 113,000. The other plus is that we've had an RSI 50 rebound, which tends to be a leading indicator on the upside, and so looking pretty decent actually for Bitcoin at the moment. Bitcoin's doing well, then we're hoping that Ethereum will do even better, and actually, even before I looked at the chart, which I've just done now, that has happened. We were looking for 4,400 by the end of this month, and we've got up to 43.29. So we're feeling quite smug about that. We're in record high territory. The old resistance 41.40. Above that, looking for up to 4,500 in coming days, and that is quite a decent recovery for this market. So any companies which have Ethereum on their balance sheet now looking quite sexy, or sexier than they did at the end of the week. If you're a fan of Ethereum and looking for greater glory, 5,500 by the end of next month could be the target there. That would be the second upper parallel of that March rising trend channel base. And the other point to note is that even though I keep on saying RSI 50 rebounds like a broken record, that one there at the beginning of the month, around the 3,500 level, has been absolutely fantastic. In fact, you could argue there have been two of them because there was another bounce for the RSI in the upper 50s. So that has delivered upside there. So great news for Ethereum. On to gold, and here the picture is still a struggle, but towards the 3430 area, which is that April resistance line. We still haven't been able to get through to record highs. I think we might have done briefly, but not on this chart, on the basis of the gold tariffs, which seems absolutely mad, but tariffs on gold. Break of 3430, and we could be looking at 3800. Maybe not by the end of this month, although it depends on the news, but we're looking for that maybe by the end of next month. While we remain above the floor of the channel there, 3320, and the 50-day moving average there, 3350. The other point to note is that the RSI, the 50-day line is rising well now after a slight dip, and the RSI has actually bounced at above the neutral 50 level on the RSI. So we do have a setup, not an incredible setup, but we do actually have a setup with a rising 50-day line and the RSI 50 rebound. So two unrelated positive triggers for the potential upside. Moving on to the stocks, and starting off with a stock which somebody mentioned on Twitter just a few minutes ago, actually, and it looks like a good idea. I've already been looking at it. You can see the shares hit the target there at 1.9 pence, right on the nose at the end of the week. And in fact, we were already looking for more than that. We were looking for the upper parallel of that rising trend channel from March last year, heading to as high as 2.5 pence, hoping for that by the end of next month or even sooner. The other point to note is that we've had three clear RSI 50 rebounds there. The first one was before or as the shares were taking up around 1.25 pence, and the last two in this mid-move consolidation that we've got. And so 2.5 hopefully on the cards while we're above the recent swing low there, around 1.6 pence. Stock which nobody's heard of, so therefore it's included today. Arecor looks great, in fact, because we've got that sideways and then vertical, the sort of step fashion ascent here. First target hit here at 59 pence, and above that, looking for the upper parallel of that rising trend channel base from February as high as 88 pence by the end of next month. Looks a bit optimistic, but we do have a gap fill at 74 pence to shoot for initially. Hopefully that'll be hit in coming days, and then 88 by the end of September or even sooner, as I have said. On to another stock which has delivered the goods on the technical front. You can see that we had our initial target there, 1.7 pence on critical mineral resources, and the second one there, which was a bit felt a bit optimistic at 2 pence. Above 2 pence, we're looking for the resistance, the old resistance on the way down from February last year, as high as 2.75 pence, and looking for that by the end of next month or even sooner. Hopefully, there's nothing really on the chart between 2 and 2.75 for critical mineral. The other point to note, which is a nice point, is the way that the 50 and 200-day lines are both rising in parallel now, which suggests we're about a week or two away from a golden cross. A final point to note is the way that we've had lots of strong candles there, opening at the low, closing at the high. Last three sessions, in fact, very, very strong candles indeed. So it looks like somebody's rather keen to accumulate those shares at the moment. On to CapEx, which I've been going on about like a broken record, largely because the charting worked here. We were looking for, I suppose, the main resistance here was at 0.2 pence, but we've got a rising trend channel here now. Gapped up, we gapped up twice on the bounces, and once at the middle of last month and the beginning of this month. We've got a rising trend channel there heading for up to 0.58. Looking for that by the end of next month, while we remain above the recent gap top there around 0.33 pence. So that's also the floor of the channel. We've also had an RSI 50 rebound. In fact, we've had two, if you include that little dip and then bounce that we had in recent days. A stock which I've been rather fond of in the recent past, although it hasn't actually sort of reciprocated, let's say. But here we've got Ensilica finally breaking out of that falling trend channel from August last year. The level there, 45 pence above that, looking for as high as 59 pence by the end of next month. I was dreaming that this would be the next Nvidia, but or the equivalent of one of the US tech giants. But let's see if Ensilica can deliver the goods. Clear RSI 50 rebound in the recent past, in fact, well above neutral 50. So above 45, hopefully 58 or 59 pence is uh, well glued on, or nailed on rather. On to Ferrexpo, which I suggested when the shares were 48p that just even the thought of peace talks could get the shares up to the gap there, up to 63 pence. We got rather close to it. I think the high on Friday is 60.9. But looking for the 200-day moving average at 71 pence, hopefully by the end of this month, peace or no peace in our time on that particular situation. But the key here is that while we're above the recent broken post-June resistance at 51 pence, looking for 71 pence in coming days. On to Tech, which I keep an eye on just to see how it's progressing within a rising trend channel that's been in place since the summer of 2023, and the top of that channel heading for up to 48 pence. We're looking for that by the end of this month. Given the unfilled gap to the upside that we had back in June, it's a slow situation, but still the trend there looks to be pretty decent. Upside valid while we're above the 50-day line there at 34 pence. So let's see how that pans out. A stock which was a slow burn, in fact, very slow burn, given that it's been in a horrific bear market for months and months, has been Nativo. I drew a broadening triangle there on the chart a couple of weeks ago, and that was heading for 0.86. That obviously seemed rather optimistic, but doesn't look as optimistic now after the 100% rise on Friday. Still looking for that 0.86, maybe as soon as the end of this month, while we're above the old July peak there at 0.48. Otherwise, obviously, we've already retested June resistance around 0.67, but best case here, 0.86 by the end of this month. Moving along to a situation at Pensana, and here it's been an almighty run, a very impressive one. And obviously, we've pulled back from the best levels, but it looks as though we are at the floor of the rising trend channel there from back in March. And we've also found multi-day support above a rising 50-day line, which tends to be a leading indicator on the upside in its own right. The RSI now pushed back above neutral 50 as well, to stand at 53. So looking for at least a retest of the 90 pence zone in coming weeks. Best case by the end of next month, we're back at £1 at the top of that channel. But as long as we're above the 50-day line at 66 pence on an end-of-day close basis, still looking for a resumption of the uptrend there. Moving on to Predator, which is always fun given the grumpiness of its CEO, alleged grumpiness, obviously. Here you can see that we had the big gap down on MOU3 disappointment, but had a nice turnaround here for the shares. Higher support and sort of U-shaped turnaround or hook-shaped turnaround tends to be a sort of at least a decent signal, or one which is worth noting. And looking for the shares to at least try and fill that gap and hit maybe the 200-day line, 4.5 pence, sometime during the course of August, even if they fall again after that. You can see that the last couple of days we've seen strong candle action with opening at the low, closing at the high. So presumably one or two people are feeling sympathetic towards the company and its prospects. On to Rome, and here the situation is that having decided that the 0.16 area was the low for the shares, they actually obeyed orders and doubled after that from April to June. Current situation is that we've had a gap close buy signal, so closing that gap from the beginning of the month above 0.26, which is the top of the gap. Looking for the shares to make progress towards 0.4 pence by the end of next month, obviously while we stay above recent support of 0.24. Finishing off with a stock which I don't normally look at, but looks as though there has been a change here at THG. we managed to be above and actually have support above the 200-day moving average for the first time properly since the early summer of last year. And so that looks as though it is a decisive change in trend. We've also had 2 days where the open and the open was the low, the close was the high. Again, it looks like somebody's quite keen. So 41 pence, hopefully, the minimum on the upside here by the end of this month, even if we then fail again after that. Ideally, we stay above recent broken neckline resistance at 33 pence. That's it for me today. More updates tomorrow.